Hi and welcome to Explained. I'm going to explain to you today how the double entry accounting system works. Now it doesn't matter if you don't do that for day-to-day living, you don't have to understand accounting or use it every day for this to be useful. But for those of you that are struggling to get the double entry accounting system under the belt, really the simplicity thereof is the fact that you're trying to balance a source of money with the application of the money. That really is what it comes down to. So in simple terms, your kid got $10 pocket money, that's the source, and he bought himself $4, $5, $6, say $6 worth of candy or cold drinks. So you can account for $6 in your booking, say candy and cold drink, that's an expense, and $4 is still in the savings account, that is an asset. So the source of $10 must balance with the application thereof. And if you look at large corporations' balance sheets, there is one single item that is earnings or profit or something to that effect, which really is just saying of all the activities that we're busy with, that we become more wealthy or less wealthy. But essentially the balance sheet that must balance is all about source and application. Where did the money come from? Did we borrow it? Was it capital injected? Did we make it through profits? Where did the money come from? And when we got the money, what did we do with the money? Did we buy stock? Did we invest it? Did we buy property? What did we do with the money? That is the double entry accounting system and the brilliance thereof. If you go further, then if you look at the income statement, there's nothing necessary to balance there, but really the income statement is an extension of the balance sheet. So it really is, if you think of expanding and collapsing in today's software world, the earnings portion in the balance sheet, you want to just expand in the income statement. It'll tell you more detail. It'll tell you, okay, we did that much sales, that much it cost us to buy the stuff that we sold. We made so much profit on every item that we sold, but we had to pay salaries and all of that, and this is what was left, and that's how much tax we paid, and in the end, that's the amount of money that we gained. After all of that, after all is said and done, that's the amount of money that we gain, and that we take to the balance sheet. So you can immediately see it's again a source. Balance sheet, source. Either we borrowed the money, or we made it, or we inherited, or it was invested, or whatever. And then of course it permeates into other places like cash flow statements, which again is an expansion of the income statement, which helps you understand within the income statement, you know, are we actually generating cash, or are we just chasing our tails and essentially earning a salary? I hope that explains it. Whenever you get stuck in the double entry accounting system, just think, what is the source and what is the application? This is Louis. If you like this, hit the like button. You're watching Explained.